If you are working full-time job and aiming for a great source of passive income while still enjoying your career, have you considered investing in residential real estate? Hello, fellow investor. Welcome back to my channel. I'm Korianne. Today we are diving deep into a topic that sparked a lot of debate. Residential family homes. Are they the worst investments of all time? Well, stick around as I share my journey and reveal why despite the skepticism, I decided to make a residential real estate my to-go investment at the beginning to grow my net worth and to be in control of each project. So why did I choose to invest in single family homes at the beginning of my real estate career? And why is it still my favorite investment strategy? Let me break it down for you. Before I proceed, I would like to extend a warm welcome to our new listeners. If you are finding value in this content, consider supporting along the way our channel by subscribing. Our mission is to impact real estate investment wisdom, making cash flow from a real estate an integral part of your financial independence toolkit and helping you achieve your financial goals sooner. Here are the main reasons that I got into investing in residential real estate. Number one, lower initial capital investments. A significant advantage of many real estate properties is the relative modest upfront capital they demand. Typically, I have found that most properties require a down payment of around 20% or slightly a little bit more, depending on the city of investment. For instance, if I were to invest in a property priced at $250,000, my down payment would be approximately $50,000 with additional funds required for the closing cost. Fortunately, meeting this savings goal was feasible based on my income while maintaining a full-time career that I enjoy working at. For those of us with a full-time career who are just beginning to set aside funds for your financial future, saving for the down payment may take a year or more. However, if you choose to invest in a commercial project valued at $1 million, the required down payment of $200,000 could delay your investment plan for up to 4 years. Another critical consideration is whether you are comfortable putting all your eggs in one basket, a decision that warrants careful thought. Reason number two, long-term wealth growth. I started a new company in the same year that I started investing in real estate properties outside of the state. Following a weekend long real estate investment seminar, I dedicated several months to explore my options. It became clear to me that buying and holding residential real estate investments was potent means to enhance our net worth over the long term. I saw the opportunity to utilize our active income savings to invest in securing our financial future. So with a solid plan and the right market economic conditions, single-family homes have become a key player in achieving our financial goals. For most of them, these properties are affordable prices in the low 100, 200, and 300s, and some of them 500s. They have twofold the value now. I had fixed debt on all these properties and debt was paid down by the rental incomes since then. On top of that, the natural inflation rate forced the cost of construction to be more expensive to build. Therefore, I received the bonus gain from the appreciation in the good steady growth real estate markets. A crucial point to remember is to consistently invest in properties that generate a monthly cash flow right from the outset. Reason number three, financial stability. I already had a stable source of active income, which allowed me to secure a good mortgage for financing without the need for partner or extensive down payments. Being in control of my project from the start to finish was a game changer for me at the beginning. I got to learn a lot from each project as well as each new real estate market that I invested in. From my experience of investing with partners, I often found myself in situations where my partner designed an exit strategy. This frequently led to a grappling with capital gain taxes, making it challenging to find suitable replacement project and ultimately hindering progress to my long-term financial goals. After 23 years of real estate investment, I have learned that achieving financial independence doesn't necessarily require vast portfolio of real estate projects, and you have to take on a huge risk. Generating a six-figure cash flow income from residential real estate is within reach for every professional with an active income, even while maintaining a full-time career. By securing a fixed-rate mortgage on these projects, you can leveraging up to 9 residential mortgage loans based on your qualification income and credit. Over the course of 2 decades, your rental income experienced growth, leading to an increase in your monthly cash flow income. Meanwhile, your mortgage payment remained fixed, and with only some additional costs from property tax and insurance, resulting in the repayment of the loan in less expensive dollars. The nice thing, the mortgage balance is paying down while the rental income is generated. And reason number 4, easy liquidation. Another reason why I love investing in residential property is the ease of sales. Choosing the right city with strong job market and economic growth ensure a consistent demand for housing. So in the long term, selling become a seamless process. If you can invest in a B or better neighborhood with good school rating, you can easily sell it to the next buyer if you would like to use the fund to exchange for better or newer real estate asset in the future. I was able to sell my residential projects in less than 60 days for most of them to exchange for higher price and newer built projects. And reason number 5, learning and understanding real estate. Starting with residential properties was crucial for me to learn and understand the dynamics of real estate investments. I have gained a foundation that I can easily pick up other real estate assets to continue growing and preserve our asset into the future. It's allowed me to grasp the potential for both net worth growth and monthly cash flow, essential components for an achievable financial independent goal that I set at the beginning. Initially, my goal was to invest in 20 properties. However, as time progressed and 2 more sons became a part of our family, this objective evolved. Alongside this, my knowledge expanded and I continue to learn, aiming to mitigate our investment risk. And reason number 6, reduced taxable income rate. As property owner of residential real estate properties, we benefit from valuable tax incentive provided by the IRS, especially through depreciation on each invested project. Being a real estate professional allowed me to deduct these tax incentives from my active income or other income sources, effectively lowering our overall tax rates. Now, let me ask you a question. If you are working full-time job and aiming for a great source of passive income while still enjoying your career, have you considered investing in residential real estate? Or do you like to invest in commercial real estate because you have the skills and resources? Share your thoughts and experiences in the comment below. I would love to hear about what you have learned or if you have lived into a residential real estate investments. And there you have it. My reasons for choosing residential family homes as a solid investment strategy for us many years ago. Before I let you go, if you found value in it today, don't forget to like this video, subscribe to my channel, and hit that notification bell to stay updated on real estate investments and master your finances. Until next time, happy investing. Ciao!